Hey everyone, welcome to the first video on Ethics and Business, Module 1. Now keep in mind with Ethics and Business is it's a very different subject to your normal subjects in CA. It's only a fraction of the level of content that we go through from a normal subject, and this is reflected in the timeline of the subject. It's only a 2-week subject. The concept itself is pretty straightforward. It's talking about ethics. So yeah, don't feel like after doing ethics that this is the level of complexity and intensity of the other subjects. Definitely not the case. It's an easy module to get through. But let's get started and dive right in. So the videos probably won't be as long as they normally are. So first chapter is around ethics. So, what is ethics? Ultimately, it's a system of moral principles by which human actions and proposals may be judged good or bad. So essentially, it's a moral compass where, if a human does something, whether it's stealing from a company, right, we have a framework to apply to say that, this is either ethical or non-ethical, right? And ethics is a big topic within these professional fields, so CA and CPA. The reasons are for a few things. The first one, which we'll kind of talk about, self-regulation, is a key concept within the accounting profession, particularly for audits. And the reason is you have these historical example of these large firms which have failed. Think back to HIH, Ansett, and various other examples where there may have been instances of corporate fraud or poor controls, and they've passed the audit. The audit hasn't picked up on these issues, and the companies have essentially failed. During those times, there's been a lot of pressure and focus on accountants saying, how could you have let this pass? People relied on you. People lost a lot of money. This is a failure in the system. So, at these pivotal moments, you could have had the government stepping in and increasing regulation on accountants. But instead, what we have is the CPA and the CAANZ professional bodies, as well as CFA, etc., saying, look, we represent our members. We will push this ethics regulatory framework to our members, and we will self-regulate. And that's holding the government at bay from regulating the industry because of this self-regulation. Okay, so let's talk about the common characteristics of professions. So professions have particular characteristics. So self-regulation, as we talked about it in the example before, adherence to a code of ethics, right? Organization into a professional body, advanced education and training, continuous professional development. So this is, after you graduate CA, you need to continue to do these certain hours every year because that's going to ensure your knowledge stays up to date. And this is just another way of ensuring all members of CA and I guess CPA, when people see that you're a CA or CPA, they know that you have a high level of integrity, high level of knowledge, high level of ethics, etc. Expertise, acts in the public interest, self-discipline of its members, client-focused, status and influence in society, collegiality, which is like working together with other CAs basically, and a specialized body of knowledge. So all of these factors are reflected in the body of CPA and CANZ. And so accounting profession is one example, but it could be, another organization could be, those who do CFA. So, investment bankers and financial analysts. It could be the people who do, it could be, something like pilots and how the pilots have their own kind of professional body. That, if you're a member of that professional body, you have all of these characteristics as well. It's not necessarily tailored to just the accounting profession. So the most important characteristic of all the ones that we listed above is essentially adhering to a code of ethics. And why is this so important? It's because professions, and again, think about accounting in this example, are relied upon by several stakeholders, including the public. For example, when an individual, your mom and dad, they're investing in a stock, they're reading the financial statements, they see it's audited, so they assume it's reliable and they make an assumption based on that. There is a level of trust around accounting firms and accountants. Hence why because of this trust, why ethics and integrity outweigh expertise and education as the key factors. So regulatory bodies throughout the world responded with heavier oversight of accounting historically, and these are kind of largely driven by historical events. So in particular, kind of large firms which have had corporate failures and maybe not picked up or identified in audits. So in the US, there was the Sarbanes-Oxley Act, which was introduced in 2002. And the purpose of this was to increase requirements for public companies to strengthen audit committees, internal controls, and make directors and officers personally liable for the accuracy of FinStats and disclosures. In Australia, the Corporate Law Economic Reform Act, or CLERP 9, as well as the ASX Corporate Governance Principles and Recommendations, which is applicable for ASX listed stocks. So these are two guidelines which essentially, or requirements, which essentially strengthened the guidance on auditor and board independence on either a mandatory or comply and explain, for the ASX at least, basis. Similarly, you may remember the Royal Banking Commission. So, obviously there was examples of misconduct in the banking industry in particular, but also within superannuation and financial services, like financial advisors, etc. And as a result, this profession, which would have been bankers, financial advisors, etc., they were doing a lot of dodgy things, like, not necessarily checking loans properly, doing low doc loans, high fees, etc. for financial advisors. Ultimately, these are people in a profession who acted badly and didn't act with integrity and ethics, and therefore this is reflected badly on their profession. And of course, when the body itself doesn't regulate, what happens is the government ends up stepping in instead. And this happened with the Banking Royal Commission, but it's also happened several times throughout history. So the Banking Royal Commission began in December 2017, and the report essentially recommended that companies need to have sustainable cultures, which need to be built from within and adhere to the following principles. Number 1, obey the law. Number 2, do not mislead or deceive. Number 3, act fairly. Number 4, provide services that are fit for purpose. Number 5, deliver services with reasonable care and skill. And number 6, when acting for another, act in the best interest of that other.